So what I'd love to be able to do in this session is go through if Townsville has anything left in the tank. I've been purchasing for clients in Townsville over the last couple of years, and I have seen relatively good growth for my clients. And what I'd love to be able to do in this session is go through some of the past performance, leading indicators, and go through a bit of a case study as well, and just go through a little bit around who Townsville might be the best fit for. So look, without any further ado, we will kick off. And look, at the conclusion of this session, what I will do is I will give you access to my capital growth report. The capital growth report will detail 5 areas under a median price point of 650,000 that have good capital growth potential. And what I will do is I will give you access to that white paper as well. I will share my screen, and I've got a bit of a song and dance for you. And here we are. That's me. That's my ugly mug. So does Townsville have any growth left in the tank? So as always, this is not financial advice. The information provided in this presentation is general, it's factual, and it doesn't constitute financial, legal, or even tax advice. It's currently based, the content is based on current market trends, just general principles of property investment. It may or may not be suitable for your individual circumstances. Please take this with a grain of salt. And if anything, use this information to spur you into action and see how or if property is a something that could be used to help you meet your goals. I do not take any responsibility for any financial decisions made on the back of this presentation. It's called due diligence. Do your own due diligence and make sure investing in property, whichever area best meets your needs. And so that being said, let's kick on. So look, this is the recent performance of property in Townsville. You can see here when we look at the home value index over the last 3 months, you can see some areas of Townsville have had up to 6% growth when we look at a index rated basis. Normally a lot of the properties in this area in particular around sort of central, south, and even west of Townsville here, you're seeing anywhere between 3 and 6% growth, which is relatively good over the last 3 months comparatively. If we have a look on a 12-month basis here, you can see that Townsville has grown more than 12 months. When we look at the overall index of property, you can see here all of Townsville has pretty much grown here. There are some areas that haven't been marked as part of the index, and that's more than likely because data hasn't been taken for for those areas. So what I would assume though is that this Kerwin area especially, and even Rasmussen has grown by relatively the same amount. You can see that predominantly only the Townsville CBD has only grown by 0 to 6%. So apart from that, it's overall Townsville is looking like mostly around growth of around 12% plus. In terms of these areas, rents have grown. Okay, so you can see here from this rental index change that the majority of rents have grown between 0 and 5%. You can see that some of these areas, or 5 to 10% rather, I think I'm colorblind here, 5 to 10% rental growth rate. Some of these areas are a little bit darker. You can see they're 10 to 15%, predominantly in the Annandale area here. This area is separated by the river. So you can see that sort of line there. That's the river pretty much. So on average, we're looking at around about 10% rental growth on the last 12 months. And then in terms of current median rent, you're looking anywhere between the 500 and 600 mark. You'll get a little bit more for properties in Annandale and Ununba. You're looking at around the $700 mark there as well. So that's a lot of the performance around Townsville as we have a look at that heat map. As we move into some of the leading indicators, the residential vacancy rate. Now, I've picked this area in general. This area is the area of Aikenvale, postcode 4815, which is, Kelso rather, Kelso in Townsville there. You can see the vacancy rate is around about that 0.7 to 8.8%. There's a little bit of fluctuation, and namely there's some fluctuation around those, normally that seasonal fluctuation around January. you can see that every year you have those vacancy periods. But the overall mean or average vacancy rate is about 0.7 or 0.8%, where the average vacancy rate nationwide is around the 1.1, 1.2%. So you can get below average vacancy rates in Kelso. And then similar in neighbouring postcodes there. We've got Aikenvale and Garbutt around the sort of 0.8, 0.9% when we have a look at that vacancy rate. In terms of the number of rental listings here, there's less than 100 rental listings, and typically they are on the market for less than 30 days. There has been a bit of a seasonal spike, as you can see there. Typically in January you get your spikes there, but then they come off the market pretty quickly, and you're looking at anywhere between sort of 80 and 90 properties. Typically those properties don't last too long. It's rare that properties last more than 30 to 60 days. You can see the sort of 80 to 90% of properties are under 30 days old. So, you know, if you're looking in terms of getting a rental vacancy out, you can probably expect that the majority of those will be gone in under 30 days. In terms of total property listings in the same area, you can see there that 75 properties at the moment are on the market. And comparatively, you can see for the last sort of 15 years, then, you know, out of the total 166 that we've got here, we've had sort of upwards of 500 properties there for a large amount of the last 15 years. Nowadays, we've got a total of 166 properties. More than, looks like almost half of those are on the market, have been on the market for less than 30 days. The next sort of maybe quarter, 30 to 60 days. And then let's say the last sort of third there are, you know, anywhere between 60 to more than 180. So generally the vast majority of property are gone again in under 30 days. And you can see that distribution of property over the time being. So property is remaining on the market. Ever since the beginning of last year, it's been quicker and quicker in terms of days on market, and shorter in terms of overall property listings there as well. In terms of the gross rental yield for that area of Townsville, around Aikenvale, Mount Louisa, Douglas, rental yields have really come down. So typically we're over the last 15 years or so, you're looking anywhere between sort of high fives to low sixes, especially from sort of 2019 onwards, right up until the beginning of 2024. Nowadays, you're looking at, especially for a 3-bedroom house, you're looking at an average of 4.9% there. So you're getting less than 5% on your money. And I strongly feel that's because that more and more rental property are becoming available. As more supply of rental property are becoming available, that puts downward pressure on rental prices. The other thing as well is because the capital growth of property has been going up in Townsville. The other thing as well is it's pushing the rental yield down. So rental increases predominantly because of Queensland legislation. You can't have rental increases as often as once every 12 months. So you can't increase rent at the same pace as what you get capital growth. So there's a little bit of a lag there. So because of those two reasons, there's more rental property available, even though it's been taken up by the demand. That's put downward pressure on rental yields. And the other thing as well is because of that lag between rental prices and because of capital growth outpacing rental growth, then that's why you're getting the disparity. Look, I've been purchasing for clients late 2023, early 2024. So we were getting that sort of, you know, anywhere between 5.5 and 6. Even in some cases, we're getting 6.5% on properties there. And especially now, because of the rental growth that they've achieved over the last 18 months and capital growth, they're in a much better position because, you know, the price that you pay for the property doesn't change, but the rent has still been going up over that time period. So their rental yield based on purchase price is probably around 8 or 9% now, which is great. In terms of overall building approvals, you've only got, you know, for the overall Townsville local government area, over the last financial year. Now I know we're already in April of the 24-25 financial year. There was only 600 approvals. Now, a lot of these DA approvals, especially for the houses, they might not be for new builds. They could be for existing renovations or even minor alterations. It's just that they needed to get a DA approval in for those as well. What I would expect though is for a townhouse, a 1-story townhouse or an apartment, if you're doing a DA, I'd expect that that would be for a new build, and it'd be less and less likely, definitely for the apartment, but less and less likely for a one-story townhouse or two-story townhouse. So take that with a grain of salt as well. So there's not a great big supply, long story short, there's not a great big supply that is coming to the Townsville area, because for me, especially if you're building a property, you got to think, okay, development application, typically you're looking at anywhere between, 9 and, worst case 18-month time frame. There's a new property between getting your DA approved and having a property in place. So that in terms of the overall supply of new builds to the market, that's what you'd expect. Now, in terms of population growth here for Townsville, you're looking at 1.2% population growth. This in comparison to Greater Brisbane. Greater Brisbane is expecting 1.5%. Now, the average population growth in Australia, depending on what series you look at, there's 3 series that the Australian Bureau of Statistics use. They use a low, medium, and high series, and that's just to sort of gauge, a forecasted demand. Low series over a 10-year period is 10%, medium series 15%, and high series is 20%. So we're sort of between that low and medium population projection benchmark. And so that being said, we sort of bang on that average area there. Brisbane being right on the median average of 1.5%, and Townsville being between the low and median bands for population growth there as well. You'll see that the population of Townsville is growing over the next period. So over the next 10 years, you'll see an influx. So you're looking at 1.2% between 21 and 26. Then from 26 to 31, it's going to get up to 1.3, almost 1.4% there. It's going to stay above that 1.2, 1.3% for 2031, and then come back down. So you're looking at a little bit more of an influx of population between sort of 2021 and 2036. And then that's going to settle down somewhat, similar to what Greater Brisbane is going to do as well. We're expecting a bit of an influx to Australia over the next sort of 10-year period. So that is in line with similar expectations. In terms of diversity of industry, so we want to make sure that, when we buy in an area, it's not a one-horse town. So when I say that, we want to make sure it's not a one industry town. So you can see here that there's a vast majority of industries that drive the overall economy of Townsville. So the biggest one here is healthcare and social assistance, 17.5%, public admin and safety, 12.5%, and then we've got retail trade at 9.2%. So look, when we look at public admin, we're talking sort of government roles. There is a army barracks, defence housing in the area, and healthcare, social assistance. They're typically the government jobs. So look, that is a relatively stable industry. It's not going to be too affected by, the private economy, okay? Because it's a public sector gig, it's not going to be as affected as widely as a privately, funded economy. The only other thing that we have here as well, construction, 8.5%. So we start to get into that a little bit more seasonally affected economy industries, retail trade, construction, manufacturing to some extent. So you can sort of see there that it's got a good diversity of industry. And then more notably, you don't see mining here, which is probably important. So agricultural, forestry, fishing. So that's a heavily seasonal and, weather affected economy. Mining, 2.8% rather. So mining is in the minority in terms of funding. So one of those, agriculture and minority, that probably the two of the most risk prone industries rather. So they're a feature as a minority in the area, which is important to note. Unemployment in Townsville, you can see here that unemployment has been in decline, especially towards the end of COVID there. And then we can see it sort of come up somewhat. More importantly, there is less unemployment than there is in Greater Brisbane. So that's a bit of a reference point as well. So please don't think of these regional hubs as, overly unemployed ridden areas. Some of these areas actually have great economies, good infrastructure, great employment growth, And that is just sort of testament to some of these other regional hubs. This is an example of a property that it's on the market. It's got a purchase price of $590,000. This is what the upfront costs. So that's your stamp duty, legal fees, a few other things, your due diligence costs as well. Assuming a 12% deposit, $70,800, you're looking at total upfront costs of $95,000. You may avoid LMI here with 12% depending on your lender. Otherwise, safe rule of thumb is you're looking at 20% there. The rental estimate or desktop rental estimate on this one is 5%. Okay, so assuming 5% there, roughly $500 per week. We're looking at $26,000 per annum. Take into account council rates, insurance, property management expenses, and interest only on the debt. So for interest only, I just did purchase price less deposit. And that left us with debt. I used an interest rate from memory, I used 6 or 6.5%. Bear with me, 590 less 95.3 and times 605. Yeah, I used 6.5% on that one. So that's assuming 6.5% interest rate. You're looking at a ongoing deficit of $15,000. So you need to be able to fund before any tax breaks. You need to be able to fund more than $300 a week. So 15,290 divided by 52 weeks. You're looking at roughly $294 a week. So yes, if you are overall negative gearing on your tax situation, then you might be able to claim a deduction for that $15,000. This is a relatively newer property as well, so you may also be able to claim depreciation depending on the age of the property and the fit out of the property as well. So that might be another tax break for you. So that being said, it depends on your personal tax situation, what the actual end ongoing cost is after all those tax breaks is. So this is in the area of Annandale. I showed you that area previously when we looked at some of the heat maps there in terms of how Annandale is performing. It's got relatively higher rent. This is a relatively nicer and newer build in terms of the area of town. We're looking at the home value index here has been 12% plus over the last 12 months. You're looking at 3 to 6. It's relatively, the growth has dropped off over the last sort of 3 months. And so that being said, you're looking at, that sort of high 500s as a median price point for that area of Townsville as well. So look, that being said, that is the webinar for this evening. Now, what I will do is I will leave in the comments a link for you to be able to get a copy of the white paper report. The white paper report is 5 capital growth areas with a median price point of less than 650,000. And so that being said, you will gain access to that white paper. All you need to do is put in your email address and it will be sent straight through to you. If you guys do have any questions, please don't hesitate to leave them in the comments. I will answer them for you as best I can. If you do want to have more of an in-depth discussion, then please don't hesitate to reach out to me. My number is, I leave my number everywhere. So look, my number or my email address, I'll leave in the comments as well. Thank you again, everybody, for watching, and hope to see you again in the next webinar. All the best. Have a great night.